All right, guys, welcome to another live stream. Welcome to another live stream. So the job reports have showed that jobs have slowed down. The adding of jobs have slowed down. Companies are acting like they're in a recession, and this is good for it's good for interest rates, right? Because we wanted to see that the job report wasn't as strong, so that way the next time the FOMC committee meets up, they will most likely decrease interest rates. You got to remember the last time they met up, they did not. They kept rates steady, right, and it kind of sent the market tumbling. So we want to get some interest rate cuts as far as prices go when it comes to stocks and crypto. So yeah, we're looking forward to that. But let me share my screen and let me go over this report really quick. All right, so it says job report shows a hiring slowdown as companies are acting like they're in a recession. It says the U.S. economy kicked off 2025 by adding 143,000 jobs in January, fewer than expected, but the unemployment rate dipped to 4%. So it looks like they added a bunch of new jobs, but the unemployment rate went down. So people were more employed than they were before, right? According to data released by Friday by the Bureau of Labor Statistics, economists were projecting the unemployment rate to stay at 4.1%. So they were expecting it to stay high not high, but 4.1%. I'm not sure the industry standard is that high. Probably can look that up. But it dipped down to 4%. So it must be that even though they created more jobs, that's not related or that doesn't affect the unemployment rate per se, right? Because you would think if they added 143,000 more jobs, that unemployment would go down significantly. It wouldn't, or unemployment would go up. The unemployment rate would go up, right? So unemployment rate 4.3%, high meaning, yeah, exactly. So it wouldn't go down. So yeah, you would expect with more jobs that the unemployment rate would go up, but that's not the case. It went down. So it says Friday's report, which also features some significant data adjustments that happen at the start of every year, also provided more clarity on recent labor market trends, indicating that job growth last year was weaker than previously estimated. The latest benchmark revision, an annual process that squares up estimates, showed there were 589,000 fewer jobs added to the economy in 2024. Accounting for revisions, there were just shy of 2 million jobs added last year, amounting to roughly 166 jobs per month, a pace practically equal to the 165 average gain seen in 2019. So yeah, that'd be overall a lot of jobs, right? A lot of jobs. And I wonder if that means people that actually took a position, or is it just jobs at it and they're not occupied? I'm not sure. I mean, I'm assuming those jobs are occupied, right? If they're at it, somebody had to take the position. I don't think they're just going around counting companies' positions that are not filled. But here, just a quick overview. So this is just talks about, description of the job report, if it's strong, if it's weak. If the job report is strong, meaning low unemployment, high job growth, and rising wages, the Fed may increase or hold interest rates because a strong labor market suggests a robust economy. This can contribute to higher inflation, prompting the Fed to keep rates high to cool down demand and prevent overheating. If the job report is weak, high unemployment, low job growth, stagnant or falling wages, the Fed may cut rates, which is what I alluded to earlier. The fact that we got less jobs can show that, what's going on. We need to add more jobs. But then again, we did get the unemployment rate fall down. So it's kind of like, combating one another. It says, Fed may cut rates to stimulate the economy by making borrowing cheaper, encouraging spending, investment to boost job creation. And that's kind of what we want, right? It's specifically for our investments. When it comes to stock, when it comes to crypto, we want the interest rates to get decreased this year, so that way companies can have more money to put into the market. They want to invest more because they can get money at a cheaper rate. But yeah, so it looks like the overall job market, job report, was right in the middle, wasn't weak, wasn't strong, and it may result in a 25 to 50 basis point cut. Most likely, I think it'd probably be a 25 basis point cut the next time the Fed meets up, and that would just continue the bull run we're going to see. I think in crypto and stocks will benefit as well. All right, so let's take a look at some of these crypto prices. Today, BTC was it actually went up to 100K, right? Went all the way to 100K, dipped all the way down to 95. And again, when people get optimistic, once, because kind of 100K this cycle is the psychological level where people are like, okay, if it's at 100K, we're doing good. So I think a lot of brokerages, Binance, Coinbase, when people are using leverage, and I'm not even sure if you could do leverage on Coinbase, maybe on Coinbase Pro. But yeah, when people do leverage, right, the exchanges could see that. So they make sure they try to liquidate people as much as possible. They don't want people making 5 to 10x, right? So today, so if we zoom out and we look at the week, it went to 100K, kind of dipped down and consolidated between 100K and 96. And then today we got that pop back up to 100 and then back down to 95. But you got to remember, February is historically a really bullish month. I think there was only like 1 month, one February, where BTC, out of the last 6, 7 years, that BTC was bearish, right? But for the most part, February is bullish for BTC. So I expect us to pick back up either this weekend or going into next week, because obviously the crypto market's open 24/7. All right, Ethereum. A lot of people on crypto Twitter are saying Ethereum's the next one to go. And the chart looks great, right? And I think they're coming out with their update. I think it starts with a P, their Petra, something like that. I forget the name of it, but they're coming out with some type of update. So that could be a catalyst for Ethereum. And it's been said on crypto Twitter that a lot of institutions are buying up Ethereum right now on the back end, right? You don't see it in the price right now. If they were buying on the market, like on exchanges and stuff, they're buying OTC. I think is it OTC, or it's just basically buying off the market so nobody can see and it doesn't affect the price, right? So yeah, but Ethereum, I think the overall chart looks good, but obviously all coins are taking a beating. So, but I think we're going to rebound pretty soon. I think we rebound pretty soon. I think we see prices go up in crypto this month for sure. All right, so overall market here, S&P is down, Dow's down, Nasdaq's down, Russell's down, crude oil is up, and gold is up. So yeah, I mean, the jobs report kind of was in the middle. It didn't really suggest anything bad. I mean, the only thing, 27,000 less jobs than what was predicted, but unemployment did go down. So that, I guess that's a plus for people getting a job. But again, we kind of want to see a bad jobs report, right, for our investments, and it's probably not the best thing to say, but that's what causes the Fed to cut interest rates. Now, I'm not saying that. I'm just saying what happens, right? Terrible job report, meaning people don't have jobs, less production, not enough productivity. So in order to incentivize that, lower interest rates, more capital goes into the market, more investments, right, for companies. And I guess it is good because they get the money, they invest more into their company, they can hire more, they make more money. So, but yeah, so overall, the markets look, they were down today. Nvidia's actually trucking back up after that DeepSeek news. It wasn't really, nothing really, it was just a quick blimp in the price, right? It wasn't. It's not like a DeepSeek is going to take over Nvidia, or it's just a software. I mean, when you looked at it, it was just a software thing, and it's open source, so it's nothing that Nvidia can't. And it's really not NVIDIA, right? NVIDIA provides the chips. So again, it was a software thing. It really didn't have much to do with NVIDIA. And I think NVIDIA does have software too. They do sell software, but their main thing is their chips. But again, it's nothing that they can't implement in their software. But yeah, that's pretty much it. The jobs report's kind of in the middle. Nothing to really worry about. In my opinion, this is just going to set us up for a rate decrease for the next FOMC meeting, right? But that's pretty much it. I'll see you guys in the next one. Have a good weekend.